So on Saturday, the United States struck 3 Iranian nuclear sites. And in response, the world's sixth largest asset rose 2.5% immediately. Bitcoin didn't crash, it didn't panic, it rallied on the news and held steady for 12 hours. Then came Iran's retaliation rhetoric, and with global markets still shut down over the weekend, Bitcoin, the only asset still open, took the hit. It fell to a low of just under $99,000, which is a 4.5% move, peak to trough. But now, it's Monday morning, and Bitcoin is back up to $102,000. Let that sink in. Despite being the only liquidity spigot open during a worldwide geopolitical crisis, Bitcoin fell only 4.5% and recovered in under 18 hours. Zoom in, and it might have looked like panic, but zoom out and understand Bitcoin's monetary properties, and it looks like resilience. And here's why that matters. Bitcoin didn't fall because the asset depends on the US and Iran conflict. It didn't fall because the asset is over-leveraged or fundamentally weak. It fell because it was the only thing open, and global market participants could sell it when the rest of the world was closed. When the US launched its strike on Iranian nuclear infrastructure, Bitcoin rose because it trades every hour of every day. It was the only asset with a real-time price, and that's how the market decided to react. It only pulled back once Iran responded verbally and made it clear that chances are this wasn't the last of it. And even then, it didn't fall by much. And now it's almost completely erased that drawdown. This isn't Bitcoin's typical high beta risk panic behavior. It's the behavior of a global liquidity benchmark in the making. Now, we've seen this before, but this time it looks a little bit different. During the COVID crash, Bitcoin was sold first and then rebounded first, just like it has now. The only difference is that Bitcoin sold off by around 30%. During the Silicon Valley Bank collapse, same exact thing. Bitcoin sold off, then led the recovery. And the pattern holds. When panic hits, Bitcoin tends to be the thing people sell first. But in this instance, Bitcoin was the only market open, and rather selling to the degree that it did during those other crises, it sold to a much smaller degree. Now, let's talk data. Over $208 million in Bitcoin longs were liquidated in just 12 hours as Bitcoin's price fell. Now, short spiked. At one point, they outnumbered longs 3.5 to 1, which is just classic Bitcoin weekend whiplash. Bitcoin bottomed near $99,000, and now it sits at $102,000. That's an ultra-quick snapback in the world's only 24/7 macro asset. Now, mind you, it's also $2 trillion in size, which makes this still more impressive. And now the real question is, what happens next? Well, if history is a guide, wartime is rough in the short term for every asset. Check out this chart from Alex Thorne at Galaxy Research. It tracks performance post-US invasion of Iraq in March of 2023. Everything fell at first. But a year into the conflict, gold was up 25.58%, outperforming even the S&P 500. That's what happens when monetary debasement ramps up in response to war. The main lesson is that all wars are inflationary. And this time, Bitcoin is not a niche asset on the sidelines. It's front and center at $2 trillion in size, larger than Meta, larger than Saudi Aramco, neck and neck with silver. This is Bitcoin's first new hot war as a top 10 global asset. And its behavior this weekend shows it's already playing its role. Real-time price discovery, around-the-clock liquidity, and increasingly, a hedge. It will be volatile, that's a given. But don't let the volatility fool you. The fact that Bitcoin rebounded while every other market was still closed, that's strength. So ask yourself, are you waiting for CNBC to tell you it's safe, or are you positioning yourself now? Because the next leg won't come when it's easy, it'll come when it's obvious in hindsight. Use this volatility to your advantage, because Bitcoin is the escape hatch. It is the only hedge against perpetual monetary debasement, which only accelerates during wartime, and it's open every day. That's all for today's video. Thank you so much for watching. If you enjoyed, make sure you like and reshare, and of course follow for more, and check out Horizon. Horizon lets you stack Bitcoin using your home equity with no monthly payments and no new debt. To check it out, go to joinhorizon.com or just scan the QR code right there. That's all for today's video. Thank you so much for watching. I'll talk to you soon.